Kerrigan Advisors is pleased to share highlights from our just-released Blue Sky report covering the dealership buy-sell market through the third quarter of 24. The report, which is distributed to nearly 12,000 industry participants across 35 countries, is considered the industry authority on dealership Blue Sky valuations and retail market trends. It is informed by Kerrigan Advisors' industry-leading sell-side advisory work, which has led to over $9 billion of client proceeds in just 10 years. The buy-sell market of 24 is on track for another record year. Through the first 9 months, 330 buy-sell transactions were completed, representing a record 544 franchises. At this rate, transaction activity is nearly double pre-pandemic levels and is tracking to a new industry peak. Robust buy-sell activity results from several concurrent factors in the marketplace. First, the moderation of industry earnings provides greater clarity for Blue Sky valuations. Industry participants increasingly believe 2024's profits are sustainable and thus are more comfortable basing their valuations on current earnings. The second factor contributing to higher buy-sell activity is more sellers coming to market. Now, for many dealers, the wealth they accumulated during the pandemic enables and in some cases accelerates their retirement plans. Between 2020 and 2024, Kerrigan Advisors estimates the industry amassed nearly 3 times the profits achieved in the prior 4 years before the pandemic. Burgeoning capital accounts combined with high Blue Sky values, on average 70% above pre-pandemic levels, prompts more dealers, particularly those without a succession plan, to sell their businesses. The third driver of buy-sell activity is the growth bias of the largest dealership groups, many of whom see scale as a key requirement for future success. Now, with valuations leveling off, the largest consolidators are leaning into acquisition opportunities, particularly in their existing markets. As interest rates moderate, incentive spending rises, and gross profits on new vehicles normalize, large consolidators have a positive industry outlook on future industry sales and profits. This, coupled with a renewed optimism in the U.S. economy's growth prospects with the Trump presidency, will likely result in a continuation of 2024's robust buy-sell market into 2025. Wall Street, by the way, agrees with this positive industry outlook. The Kerrigan Index through November 7th was up 54% from its 2022 lows and sits just 17% below its all-time high achieved in September 21. Asbury, AutoNation, Group 1, and Sonic all hit record market capitalizations in 2024. Now, investors see tremendous growth potential for the largest dealership groups to consolidate the historically fragmented auto retail sector. With a rising supply of dealerships for sale, shareholders are optimistic that the largest consolidators will continue to make accretive acquisitions, particularly given their rising stock prices and the industry's moderating Blue Sky values. In the third quarter, Kerrigan Advisors made 2 multiple upgrades to our luxury franchise multiples. Specifically, we increased the Blue Sky multiple for Lexus to a range of 8 to 9.5 times. This adjustment reflects the high buyer demand for these franchises, as well as Lexus's impressive performance in maintaining low inventory levels and achieving high profits at its dealerships. Kerrigan Advisors observes strong buyer demand for Lexus franchises due to their limited supply, high units in operation, and robust new vehicle sales per dealership. This quarter, Kerrigan Advisors also upgraded JLR's Blue Sky multiple to a range of 7 to 8 times. Demand for JLR franchises remains high, with sales up 28% for Land Rover, leading to luxury market share at its highest level in 2024. Gross profit per vehicle is also consistently superior as consumer demand for Range Rover and Land Rover lineups remain robust. Major consolidators are actively seeking to add the franchises, driving up valuation. In addition to these multiple adjustments, Kerrigan Advisors reiterates its positive outlook for Porsche, Lexus, Toyota, Honda, Subaru, and Kia's Blue Sky multiples. The initial results of Kerrigan Advisors' 2024 annual dealer survey, which will be released in 2025, supports this outlook. For the first time since 2020, I will note, though, that Kerrigan Advisors has seen a significant rise in dealerships experiencing losses, particularly Stellantis and Nissan franchises, both of which have negative outlooks on their valuation multiples. For underperforming dealerships like these, buyers are projecting potential earnings for these franchises and applying a low-end multiple on the pro forma to determine the price they are willing to pay for Blue Sky on a distressed asset. Increasingly, these weaker franchises, their Blue Sky value is actually, in some cases, below pre-pandemic levels, particularly if the franchise was profitable before the pandemic. Finally, I'd like to highlight some of the important trends in the report. Specifically, we're seeing expensive image upgrades, especially for luxury import franchises, is prompting more dealers to consider a sale of those franchises. We're also seeing larger groups who have strong balance sheets and better banking relationships increase their share of the buy-sell market, especially the largest private groups. Also, we're seeing buyers less open to new markets and more focused when they're looking at expansion on tuck-in acquisitions and growing their local scale. We look forward to your thoughts on this quarter's Blue Sky Report. Please do not hesitate to contact me personally if you have any questions or would like to have a confidential conversation about the buy-sell market. In the meantime, I wish you the happiest of holidays and a strong finish to 2024.